here.
Hello everyone and welcome to my morning report chart analysis videos with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly positive outlook actually across markets today, and that's coming as this Chinese data overnight, the clutch of key Chinese data points really did beat expectations and encouraged sentiment. Let me just take you through them. We saw Chinese GDP better than expected at 6.4%, really strong upside surprise there, and also we had industrial production strongly beating and retail sales strongly beating as well. So those three components there helping to show that the stimulus measures that the Chinese government has imposed in the last few months on fiscal stimulus and also the PBOC with the monetary stimulus as well, that really is coming through into the economy and certainly helping to improve the outlook for the potential or the slowdown that China is seeing. It sort of helps to temper that slowdown. Certainly that is being seen as a risk positive. You can see that through the Aussie dollar, which is strongly higher. Aussie is always seen to be as a bit of a proxy for Chinese growth and the economy there. And the Aussie is doing well. What isn't doing well? Bonds, we can see that treasury yields are higher, and that is helping to drive the dollar lower. Dollar seen as a safe haven play as well. So with risk appetite positive, the dollar is under a little bit of selling pressure back lower again today. So pretty strong measures there. Interesting, you haven't really seen that filtering through into the European equities. Little slight gains on DAX and CAC, very slightly lower on FTSE. Little real direction there, but the euro gaining ground as the US dollar has fallen away. Now the key underperformer is actually the Kiwi. Kiwi dollar is actually lower because quarterly inflation numbers came in weaker than expected in New Zealand overnight, and that has hit the prospects of the Kiwi dollar. Also, let's look at oil, actually. Oil, which is testing resistance now, really had a rebound yesterday, and that rebound has continued higher today. The resistance at 64.80 on WTI is being eyed, whilst you're actually seeing Brent crude breaking out. So that is interesting, the oil price, which is certainly, again, a play on global demand, or certainly the improved Chinese growth story is a benefit for global demand, and therefore subsequently we see the oil price breaking out. Another factor driving the dollar corrective move is the strengthening yuan also today. So what about data points today? Well, we've got quite a lot actually. We've got UK inflation this morning. It's broadly inflation based. UK inflation and Eurozone inflation. UK inflation numbers come out at 9:30, and that is expected to show, if I can find it, expected to show headline inflation improving to 2% and core inflation improving to 1.9%, both 0.1% higher. We're also looking out for Eurozone final inflation numbers to be confirmed at 1.4% and 0.8% on the core. Then into the afternoon, we've got the US EIA oil inventories at 3:30 and expected to be 1.7 million barrels of build on the crude, distillates and gasoline. Well, distillates slight drawdown of 0.8 million barrels and gasoline slight drawdown of 2 million barrels. But that weekly crude generally tends to be the driver. So that takes me to my chart today, which is dollar Swissy. Now dollar has been under pressure, but as you can see, it's actually gaining ground. As risk appetite has improved, it's gained ground against the safe haven Swissy, and that is benefiting to the tune of a nice breakout back above 10050, 10045. Really in a move that continues this uptrend, and you can see that trending higher move on the stochastics, RSI and MACD lines, all positively configured now. The RSI up towards the mid-60s, there's sort of moves towards 70 tend to be seen, so I think a upside potential towards a full retracement actually to 101.28, which was that key November high. I think that is likely to be seen now. We can see that the market is sort of breaking through resistance, and looks like it's back on course with the sharp moves to the upside we've seen in yesterday and pretty much through this week, really, and maintaining that momentum. And you can see that sorry, that's not right. You can see that higher lows, higher highs, positive configuration on momentum, little corrections being bought into on an intraday basis. You've got the breakout at 10045 area being a basis of support and a retreat, and again another 10030. So a nice little band of support in sort of near-term buy zone, you could argue, 10030 to 10045. Initial support today coming in at 10064, but certainly little intraday corrections are a chance to buy. So I wish you good luck in your trading, and I'll speak to you again later.